fact, I'm going to take the point of the global markets and the economy forward. We've got with us Geoff Dennis as well, joining in on the phone line. Geoff, hi, good morning here and good evening to you. Just wanted to analyze what's going on. What explains this 1,800-point fall on the Dow?
Well, I think you've had a fantastic run, of course, since the market hit bottom on the 23rd of March. You've had a huge rally, which took the market back to almost within 5% of its old high, and I think it was ripe for some sort of profit taking. I think the market was getting overextended, but I think this, you never know what the specific triggers are, but the logical triggers are, first of all, the point about the concern about the economy, which I think the Fed, to a certain extent, mentioned yesterday in the press conference Powell did, about the concerns about how long it's going to take for the economy to come back to anything like it was before COVID-19. And I think you've now got real concerns worldwide, but also in the U.S. about a second wave of the virus, which I've argued for weeks has been the risk to this market. So at this point, I don't think we should get too worried. I think it's a very, very healthy profit-taking. The market got overextended. And I think those are really the reasons why it happened now, although, as you rightly implied by your question, this was a very big sell-off.
So, to some extent, do you feel that markets would have liked to see further stimulus, even though the Fed was accommodative? The fact that there is so much pain in the recovery process, perhaps more than anticipated. I mean, we're hearing both sides of the story. Some were talking about a faster recovery just a couple of weeks ago, and now we're hearing the reverse. What is the situation actually looking like?
Well, I think there's, as your listeners will know, and you'll know, there is some reluctance, I think, in the U.S. to come up with yet another package of measures. I think there's a sense that we need to see how this particular set of measures, of which there's been a huge amount both on the fiscal side and the monetary side, how it all plays out. And yet, this pullback we've had, of course, occurred after that unexpectedly good payroll employment report, which might suggest actually the economy could be bottoming out as early as, April, May, or June, sometime in the second quarter. So I don't think it's the absence of a stimulus package as such. And I think if necessary, more will be done. More will be done by the Fed and more will be done on the fiscal side. I think it's more the market got itself overextended, and there is a realization from the market and from investors that whether this is the bottom or not of the economy, the recovery from this is going to be extremely slow. And I think the market, as I say, just got overstretched.
All right. We'll leave it there for now, Geoff. Thanks so much for joining us and sharing with us your view on yesterday's big fall. Perhaps just leveling off after the kind of rally that we've seen in the last few weeks. But we're going to take a very quick break on that note. Come back.